The audit and assurance. Audit and assurance. Audit planning. Audit planning. Before starting the audit work, an auditor must perform audit planning. Why to perform audit planning? To highlight risky areas and direct the work of audit team. How we can highlight risky areas through audit strategy. How we can direct the work of audit team through audit plan. There are some objectives of audit planning, mean why we should perform audit planning. Why auditors should perform audit planning. Through planning, we can direct. Through planning, we can direct appropriate attention to different areas of the audit. In which area we need to perform substantive procedure, mean detailed work, where we have to perform lesser work, we can identify. We can highlight, identify risky areas in the financial statements through planning. We can facilitate review and control of audit. Mean we can assign work to the audit team and so that audit team work can be controlled. And we can assign and brief with the staff appropriate skill, knowledge, training, proficiency, mean what level of staff we need to employ on different area of the financial statement. Those areas who are high risky, we need to employ high skilled, highly experienced, highly trained staff. For areas which are low risk, we can assign low experienced staff. To coordinate the work of others, mean through planning, we can coordinate the work of others, mean whether we need the work of the help of internal auditor or any expert during audit or not. Who are internal auditor, how we can use his work, who are expert, how we can use his work, we will discuss in next chapter today. Through planning, we can obtain a knowledge and understanding of client business through understanding the entity and its environment. And through planning, we can complete the audit, economic mean within cost, and effective mean on quality basis and within time. So these are the purposes, objective or importance of planning, mean why we should perform audit planning. There are two main activities of audit planning. One is called audit strategy and another is called audit plan. Audit strategy mean to highlight risky areas and direct the work of audit team. Audit plan mean detailed procedure plan about how to conduct the audit. How we can highlight risky areas. There are 4 procedures of audit strategy. Understanding the entity and its environment, analytical procedures, risk assessment, and determination of framework. What is meant by understanding the entity and environment? Obtaining knowledge about nature of the company, about internal control system of the company, about industry regulations, about business objectives, strategies, and related business risk, and knowledge about management method used to measure its performance. What is meant by analytical procedure? Comparison of financial data with financial with non-financial, and ratio analysis. Why? To investigate unexpected fluctuations, which could have resulted from misstatements. What is meant by risk assessment? Identifying and assessing audit risk. Not only audit risk, it's 3 component: inherent risk, control risk, and detection risk, because through risk assessment, we can also highlight risky areas. Mean through inherent risk, we can identify where there is a chance of misstatement according to nature of the company or by obtaining information. What is meant by determination of framework? Obtaining knowledge about accounting standard and law regulation required for the company, because through this we can also highlight risky areas. And the risky areas are highlighted through audit strategy against which we will be able to define audit plan. What is included in audit plan? Critical areas mean list of high risky areas. we will define preliminary materiality level for the auditor team against which they need to compare misstatement found during the audit. And we will define a nature, timing, and extent of audit procedures. Mean response to risk. Mean against what risk we need to perform what kind of procedure mean nature. At what time mean either during year, after year end, or at the final day of the year end. And extent mean how much we should check the transaction, either large sample size or small sample size. And we will communicate this plan to the audit team so they will work according to that plan. So audit will be completed within time, within cost, and on quality basis. We have covered materiality, we have covered understanding the entrance environment, we have covered analytical procedures, we have covered risk assessment in previous lecture as well. Risk assessment means we need to identify and assess audit risk. What was audit risk? A risk of giving inappropriate opinion due to undetected misstatements, and it is a combination of inherent risk into control risk into detection risk. Inherent risk, a risk due to nature of the company, or a risk that misstatement may occur. A risk that misstatement may occur at assertion level or entity level. In inherent risk is at two level, assertion level and entity level. Assertion level is also called individual transaction level. The chance of misstatement may happen at two level. Assertion level means small individual transaction level. Mean there could be misstatement in individual transaction. Like if company is going to buy an asset, there could be misstatement. If company is recording a sale with the customer, there could be misstatement. If company is not recording a expense transaction, this is called assertion level, mean individual transaction level risk misstatement. Or misstatement could happen at entity level, mean big large misstatement. Like management have increased the sale of current year by 3%. Management have omitted any liability from the balance sheet. That is not related to individual transaction. That is relating to any account balance in the financial statement. So that will be called entity level or balance sheet level. Mean large misstatement will be called entity level. Small misstatement that could happen either due to fraud or even error, that will be called assertion level or individual transaction level. So inherent risk happen at two levels, assertion level and at entity level. Okay, we have learned there are three types of audit risk: inherent risk, control risk, detection risk. Some writer says there are two types of audit risk. One is called risk of material misstatement, ROMM stands for risk of material misstatement, and other is called detection risk. Now, risk of material misstatement include both inherent and control risk. Audit risk is having three components. What are the three components? Inherent risk, control risk, detection risk. No, audit risk is having two components. What are the two components? Risk of material misstatement and detection risk. Now we will not say inherent control. If there are two components, what are the two components of audit risk? Risk of material misstatement and detection risk. And risk of material misstatement include inherent plus control risk. If examiner asks to identify risk of material misstatement, this means from the scenario we have to identify inherent and control, not the detection risk. And if examiner asks to identify audit risk, In that case, we have to identify all three. Is that fine? So audit risk is a combination of inherent risk, control risk, and detection risk. We can also say audit risk model is equal to risk of material misstatement into detection risk. Is that fine? So let's move forward. What is meant by understanding the entry and its environment? Obtaining knowledge about the nature of company, obtaining knowledge about internal control system. Now we are moving towards what is internal control system. What is internal control system? Internal control system. Policies, procedures that work in the organization is called internal control system. Means system, internal system of the organization will be called internal control system. There are 5 components of internal control system. What are the 5 components? Control environment, risk assessment, control activities, and monitoring of control. And 5th one, I forgot. Chapter 6, audit planning. So there are 5 components of control system: control environment, risk assessment, information system, control activities, and monitoring of control. Mean either control system of the company will be strong or weak depending upon these 5 components. What does it mean by control environment? Control environment mean attitude of top management regarding policies, procedures. If top management is following controls by themselves, following policies, rules by themselves, everybody else in the organization will be influenced by them. They will also follow rules, regulation, mean control system will be strong. If top management himself not following policies, procedures, nobody will bother to follow policy procedures. This means control system will be weak. Because everybody working in the organization are influenced by top management. How the top management behaving regarding rules, regulations, everybody will focus rules, regulation in the same manner. Who set the culture of the organization? Top management, the leader of the organization. If the leader is caring, honest, distinguishing between right, wrong, following the rules by himself, everybody in the organization will be caring, honest, following rules. If the leader is corrupt, he himself not caring about right, wrong, he himself not following policies, procedures, nobody else in the organization will follow rules, everybody will be corrupt in the organization. So if a control environment mean attitude of top management regarding policies, procedure is positive, this means we can say control system is strong. And if top management attitude is poor regarding policies, procedures, the control system will be weaker. Risk assessment means whether company is defining its risk management strategy or not. What is risk management strategy? To identify risk, to control risk and to monitor risk. Every business has to identify their business risk on proactive manner. Mean what risk business can face in future, they have to identify it. Not only they have to identify it, they must know how to control the risk. And to control the risk, they must have some policies, procedures implemented in the business. And they should also monitor whether the policies to control the risk are properly working or not. And this is called risk management strategy. Mean to identify business risk, to control risk, and to monitor risk. And if a company is having a risk management strategy, this means business risk are under control. Control system will be strong. If there is no risk management strategy, this means business risk are not being controlled. So control system will be weak. Control system of the organization depends upon information system as well. Information system mean communication system and decision making system. If the communication system, decision making system of the company is fast, quick, this means information passes quickly on time to others. Everybody know about what we need to do. Control system will be strong. But if the communication system, decision making system is slow, people are not aware on time what they need to do, control system will be weaker. Control system also depend upon control activities. Control activities mean types of control. Mean there should be some types of control in the organization. Mean there should be some policies implemented in the organization. And what could be those types of control? There are 8 types of control. We will abbreviate with spam soap. In spam soap, S stands for supervision. P stands for personal. A stands for authorization. M stands for management. Then S stands for segregation of duties. O stands for organization. A stands for arithmetic. And P stands for physical. Supervision, personal, authorization, management, segregation of duties, organization, arithmetic, and physical. Mean these 8 types of controls should be implemented in the organization. If these controls are implemented in the organization, control system will be strong. And if these controls are not implemented in the organization, control system will be weaker. What does mean by these 8 controls? Supervision means there should be monitoring of everybody's work. If junior is performing any work, that should be supervised, that should be monitored by any senior. If there is no monitoring, nobody will bother to perform the work properly. So there should be monitoring of everybody's work. Personal. What does mean by personal? Personal term is associated for skilled people. So the work should be assigned to the people according to their skills, so that the work should be performed in proper manner. If people are not having skills and you are performing the work to them, it will not be performed properly. There will be chances of errors. Authorization means top management should approve a big order for the organization. If organization want to buy something, there should be approval, there should be authorization from the superior person, so that unnecessary buying can be stopped, can be avoided, so that liabilities for the business can be controlled. If unnecessary buying is stopped, liability for the business will be controlled automatically. If they are buying unnecessary goods without approval, without authorization, liability will increase for the business. And management, top management have to make strategies and give direction to lower level, so that everybody should know what they need to perform and how they need to perform. So there should be monitoring. Tasks should be assigned according to skills. There should be approval of large orders, and top management have to prepare strategies and communicate to lower level. Segregation of duty means the work should be divided between different people. No one person should be responsible for so many tasks. If one person is authorized for so many tasks, there will be more chances of fraud, because he will be able to hide fraud. Nobody will ask him. If the work is divided into different people, then if one person is doing something wrong, other person can detect or highlight that issue. Organization means there should be a organizational chart defined. Who is responsible for what? It should be defined in a written form. There should be structure, hierarchy of the organization. Who need to follow him? Who need to report to him? It should be defined in written form. Arithmetic means if any person is doing something relating to calculation, is a arithmetic check should be performed to identify any arithmetic error. If one person is preparing financial records, and other person should recheck his work, perform the calculation again, so that if there is any error, arithmetic error, that can be avoided. And physical means there should be some physical controls over high value assets and inventories. Physical control means there should be security guard, there should be CCTV cameras, there should be lock rooms to avoid misuse of assets as well as high value inventory, so that assets can be safe. Physical controls like security guard, CCTV cameras, lock rooms. These are called physical controls. So there should be monitoring. Tasks should be assigned according to skills. Orders must be authorized. Top management must give direction. Work should be divided into people. Organizational chart should be defined. And recheck of arithmetic work to identify errors. And there should be physical controls over high value inventory and asset to avoid its misuse. So 5 components of internal control system are: control environment, mean top level management attitude should be positive regarding policy procedures. Risk assessment mean business should define its risk management strategies to control business risk. Information system mean communication, decision making system should be quick, and how we can implement quick information system with the use of IT mean technology. And control activities mean there should be some minimum type of control. What are the minimum type of control? Spam. So, and there should be monitoring of controls as well. Who will monitor the control? To monitor the control, there should be internal auditor, whose main responsibility is to review the internal control system and report weaknesses to the management. If any of the component is not there, is missing or weak, control system will be weaker. So let's discuss these in our chapter 6. Control system and its components. Here are these: control environment, risk assessment, information system, control activities, and monitoring of control. What are the objectives of internal control system? Through internal control system, business operations can be run efficiently and effectively. We can safeguard assets, especially through physical control. Liabilities will be controlled through authorization approval before placing order. Management policies are adhered, mean followed by through monitoring supervision. We can ensure everybody is working as per management policy. Through management means strategy direction. We can ensure management policies are followed by. And fraud and errors are prevented and detected, especially through arithmetic control, monitoring, and supervision control. Main purpose is to prevent, detect fraud and errors, so that financial statements can be produced true and fair. And these are the types of control. Spam soap. And this chapter, we have a small 2 topics left. And after that, that chapter will be finished. So do you listen the other textbook? Anywhere you can study, or just focus on my lecture and practice question, that will be fine. Your main focus should be on practicing the question, especially the written question. I think the order is a bit different than the textbook. You can read from the textbook or just focus on my words on lecture and move towards practice question. Because practice question are more important. To attempt practice question, you need knowledge. And that knowledge I'm giving you. Even don't need to read any book. Yeah, but like this chapter is not based on cramming. This chapter is based, paper is based on concepts. If you are having concept and you know how to deal the question relating to that concept, that's enough. So there are two topics left. Yes.
I can't able to detect fraud and error. The auditors will be responsible for future.
We're gonna discuss this now.
Oh, okay.
Fraud. Who is responsible to prevent and detect fraud? Who is responsible? Company management. Who should prepare financial statements? Company management. Who should prepare true and fair financial statements? Company management. Who should prepare financial statements free from fraud and errors? Company management. So who is responsible for detecting any fraud? Company management. So the main responsibility of preventing, detecting fraud is of company management.
Okay.
That's why they have to implement internal control system in the organization. What's the purpose of internal control system? To prevent, detect fraud and errors. Auditor main responsibility is to express opinion on the financial statement, not to detect fraud. Main responsibility is to express opinion on the financial statements, whether financial statements give true and fair view or not. His main responsibility is not to detect a fraud. How auditor should express opinion? How auditor can express opinion? Auditor should express opinion based on audit evidence. Without evidence, auditor should not express opinion. If you are saying financial statements give true and fair view, you must have evidence. If you are saying financial statements do not give true and fair view, you must have evidence to justify your opinion. What are the audit evidence auditor is having? His working paper. Whatever the work auditor perform, he need to document it. How you can obtain audit evidence, mean prepare working paper through audit procedures. Mean we need to perform audit procedures. Through procedure, we will be able to obtain evidence. We have inspected these document and we found this results. So we will write down everything in the working paper. But without performing procedures, you cannot prepare documents. You cannot prepare your working paper. You will not be able to take audit evidence. While designing this procedure, auditor should design procedure with expectation of a fraud. Auditor should so design audit procedures with expectation of a fraud. Mean there could be chance of a fraud in the financial statement. You should perform audit procedure with the mind of there could be chance of fraud. The main purpose of performing procedure is not to detect a fraud, is to take evidence whether financial statements figure is true and fair or not. But you should perform procedure with expectation of fraud, means there could be a chance of fraud. This means it's not primary responsibility of auditor to detect fraud. We can say it's a secondary responsibility of auditor to detect fraud. He should identify and assess risk of material misstatement with expectation of a fraud. Mean misstatement could happen either due to error or due to fraud.
Fraud.
So that's professional skepticism.
We're going to discuss about professional skepticism. What is that? So who is mainly responsible for preventing detecting fraud? Company management. Whether auditor is responsible regarding fraud or not, the main responsibility of auditor is to express opinion on the financial statement. Whether financial statements are free from fraud and errors or not. Free from misstatement means free from fraud and errors or not. And he should design audit procedure with expectation of fraud. He should identify risk of material misstatement at planning stage due to fraud as well. And during audit, auditor should maintain professional skepticism. Maintain. What is professional skepticism? Auditor should be questioning mind. He should be critical nature. He should assess the evidence with critically. He should not rely on the evidence he has obtained. He should always try to obtain more and more evidence. Is that fine? Let's read something. The auditor's responsibility in relation to fraud in an audit of financial statements state that the planning stage of the audit, it is necessary to consider the risk of a fraud and its effect on the financial statement. In at planning stage, he has to perform risk assessment. So he should identify risk of material misstatement caused by fraud as well. And he should identify is there any chance of fraud or not. The auditor has a duty to form an opinion on whether the financial statements give a true and fair view or not. This is his main duty. Since a material misstatement, undetected fraud error would distort the view of financial statements, the auditor has a duty to so design audit procedures to have a reasonable expectation of detecting material fraud. Mean he should design and perform procedure with the mind of a fraud. In consequences, therefore, at the planning of the audit, the auditor must gain an understanding of the nature of client business and must consider the factor that might make financial statements susceptible to fraudulent misstatements. And this include he should evaluate risk of misstatement at the planning stage, determine the existence of otherwise control to prevent detect fraud or errors. He should ensure whether controls are there to prevent detect fraud and errors, and design of appropriate audit procedure to detect material misstatement due to fraud. And in the past, examiner has asked 2 times straightforward. What are the responsibilities of auditor in relation to fraud? And for that, you need to just read the answer of question 72A and 78A. 72, I think we have covered in previous class. And we left part A, that was relating to auditor's responsibility in relation to fraud for 4 marks. Just read the answer and attempt by yourself once so that you can keep those points in your mind. Okay, now moving towards another small topic called what law how they can apply the law regulation by implementing law regulation into internal control system of the company. And then they should monitor the control, not only control, monitor whether companies are complying with the law regulation or not. If it's a we are asking the teacher is also regarding the knowledge, not compliance, knowledge. And that is a no process, no and compliance with law and regulation. There are responsibilities regarding company law regulation. What are the responsibility auditors should take understanding of the law regulation required for the company? Mean what law regulation are required for the company? Because if you don't know about law regulation, you will not be able to identify non-compliance. And you need to there's a need for somebody can should be taken for non-compliance regarding because we have regulation for the management. If they just we need to qualify and we need to see why we qualify. Why we not that don't need evidence about class. We need evidence about non-class. Because due to non-class, we can class and no issue. So first we need to take understanding about the law regulation. We need to make sure company have obtained the licenses and we need to take evidence of non-compliance. If auditor have identified any fraud or non-compliance with regulation to whom we should report. First, we should report to those charged with governance. Please we need to report to the parties. Just in many articles last year. So specifically, any specific we need to inform. So where we should report any non-compliance with law regulation or fraud detected to those charged with the governance, to shareholder if they do not correct the financial statements. Though we need to maintain confidentiality in case there is a fraud, if you have identified any problem, it can be management. So, first report, the management is not at the financial report, then he can report externally to shareholder through audit report. He can report externally to legal body if there is fraud relating to money laundering. So these are the differences between responsibilities of internal auditor and external auditor in relation to fraud. Now this chapter 6 is complete. Long chapter. You will face 15 to 20 marks paper from this chapter. Obviously, audit risk question compulsory will be there. And along with audit risk, there could be some other parts like planning objective, like materiality, like fraud, internal control system components. Examiner could ask for 4 marks, define audit risk and its components. Examiner can ask for 4 marks, explain what is meant by understanding the entry environment. Or there could be some MCQs related to these areas.
So, risk and down together.
15 to 20 marks. Complete chapter 6. There could be separate question on analytical procedure as well. Like examiner for 4 marks, examiner can ask calculator ratios for both here. That we have covered in previous questions.
Sir, do you have an IRC form like which represent this like I said 24 something.
Accounting standard.
Yeah, accounting standard.
You don't need that references. Don't need that references. You should be aware about the 2, 3 accounting standard. IAS 2 is of inventory. IAS 16 is about property, plant and equipment. 37 is about provision. 36 is about impairment. That's enough for this paper. 2 inventories. IAS 2. Inventories. IAS 16. Property, plant and equipment, PPE, mean non-current assets. IAS 37, provision. IAS 36, impairment. Impairment of assets. But even if you don't provide the reference, it's fine.
There's a platform.
These are required for advanced audit, not at this level of audit. Okay, let's move towards chapter 7. There are two main topics. One is called audit evidence and other is called working papers, mean audit documentation. Audit evidence mean an auditor shall obtain sufficient appropriate audit evidence before expressing the opinion. If you are having evidence, you should express the opinion. Either financial statements give or do not give and fair view. If you don't have evidence, keep your mouth shut. Simply say, we are unable to express anything. Because if you are expressing opinion without having evidence, you will not be able to justify your opinion in future. Party will claim you for that. So you must have evidence to justify your opinion, and those evidence must be sufficient as well as appropriate. So auditor shall obtain sufficient appropriate audit evidence before expressing the opinion. What is meant by sufficient? Sufficient mean audit evidence must be in quantity. Quantity mean audit evidence should be 10, 50, 100. Quantity doesn't mean number. Quantity mean auditor should maintain professional skepticism throughout the audit. Mean he should not rely on the evidence he has obtained. He should always seek more and more evidence. Whatever you can obtain. Quantity doesn't mean any fixed number. Quantity mean you have to maintain professional skepticism throughout the audit. Don't rely on the evidence you have obtained. You should seek for more and more evidence. While appropriateness mean audit evidence should be quality, reliable, and relevant. Quantity mean sufficient mean quantity. Appropriate mean audit evidence should be quality, reliable, and relevant. What is meant by quality and reliability of audit evidence? External evidence are more reliable, more quality than internal available evidence. There are some account balances for which we can obtain external evidence. Like for loan leases, we should confirm loan leases amount from the external bank. That is more reliable than obtaining evidence from within the company. For account receivable, we should confirm from the customer whether this amount is due. That is more reliable. Cash at bank, we should confirm from the bank whether company is having this much amount in his bank account at year end. That will be more reliable. Internal, less reliable. Internal evidence are reliable if company control systems are strong. Control system strong means there are lesser chances of fraud and errors. In that case, we can rely on internal evidence. If control system is weak, internal evidence is never ever reliable because there are chances of fraud and errors. Control system weak means there are chances of fraud and errors. Documentary evidence is better than oral evidence. Sometimes we take evidence by asking questions from others. How you record this? They will say, we record this like this. Okay, please write down on this page and sign. So that documentary evidence in written form signed is more reliable than oral evidence. Original documents are more reliable than photocopies or faxes. To verify loan, we need to inspect loan agreement. Through loan agreement, we will able to identify what is the amount, what is the interest rate, what is the time period, so that we can verify interest expense and liability. And for that, we need to see the original document. And we should take a copy by ourselves and then keep in our working paper rather than client providing you photocopy of the document. No, photocopy you can prepare by yourself. We should obtain original document. We should see original document. While inspecting any document, it should be original. And auditor generated evidence are more reliable than obtaining evidence from someone else's work. Sometimes we take evidence from other people, like sometimes we take evidence from internal auditor, but that is not more reliable. Auditor should perform procedure by himself, then verify the thing. That evidence is more reliable. So what do you mean by quality and reliability of audit evidence? External evidence are more reliable than internal. Internal evidence are reliable if control system is strong. Documentary means written evidence is more reliable than oral evidence. Original documents are more reliable than photocopies and faxes. And auditor generated evidence is more reliable. Obviously, if auditor will generate evidence by himself by performing procedure, it will be costly. Mean there will be a cost incurred to take evidence by yourself because you have to move towards that place. So you have to bear some of the traveling expense by moving to that place. So that's why auditor generated evidence are a little bit costly. Last point you don't need to cover. So what we have learned, auditor shall obtain sufficient appropriate audit evidence before expressing the opinion. Sufficient mean audit evidence must be in quantity. Mean auditor have to maintain professional skepticism for the audit. Appropriateness mean audit evidence should be quality, reliable, and relevant. We have just discussed quality and reliability. Relevance we're gonna discuss later on. What is meant by relevant audit evidence? There are some factors that influence the sufficiency and appropriateness of audit evidence, whether we need more sufficient, more evidence or less sufficient, less evidence will be enough. There are some factors. What are the factors? Degree of risk of misstatement mean if there is a high chance of misstatement, we should go for more sufficiency, more appropriate audit evidence. If risk of misstatement is low, we can rely on less sufficiency, less appropriateness of audit evidence. If the nature of internal control system, if the internal control system is strong, we can rely on less evidence. The internal control system is weak. In that case, we should go for more sufficiency, more appropriateness. Materiality of the matter in question, the account balance for which we are going to obtain evidence. If that account balance is material, mean big amount, you should obtain more evidence, mean more sufficiency, more appropriateness. If the account balance is smaller, just a 500 figure, we can rely on even 1-2 evidence. We don't need more evidence. Depends upon knowledge, previous knowledge, experience of the auditor. Means sometimes your past experience inform you whether you need more evidence for this account balance or lesser. Like if in previous year there were problem in payroll in this company, this means for the current year we need more evidence regarding a payroll because we found so many problems in a previous year. If in previous year we performed audit in past 2-3 years and there wasn't any problem in payroll, this means for current year we can rely on less evidence relating to payroll. So previous knowledge, experience of auditor will also inform you whether you need more sufficiency or less sufficiency. Finding from other procedures means sometime working on one account balance will allow you, will inform you whether you need more evidence for other account balance or not. While we are working on sale, we found there are so many misstatements in sales. How company record sales? What is the accounting entry of sales? Cash debit sales credit or receivable debit sales credit. If while working on sale, we have found there are so many misstatements, this means there will be more misstatements in cash and receivable as well. This means for cash and receivable, we also require more sufficiency and more appropriateness. So this is what finding from other procedure. Meanwhile, working on one account balance, we can identify whether the related account balance required more evidence or less evidence. And source of the information, if you have obtained information mean evidence from reliable source, less sufficiency will work. And if the evidence you have obtained is from less reliable source, mean only internal rather than external, in that case you need more evidence. So sufficiency and appropriateness of audit evidence depends upon certain factors. Risk of material misstatement, nature of accounting control system, materiality of the matter, previous knowledge experience of the auditor, finding from other related account balance procedures, and source of information. So audit evidence sufficient mean quantity, appropriateness mean quality, reliability, and relevance. Quality, reliability, we have discussed what is meant by relevant audit evidence. Audit evidence will be relevant if it supports financial statement assertions. Audit evidence will be relevant if it supports financial statement assertions. What is meant by financial statement assertions? That is also called management assertions. While preparing financial statements, management claims certain things about financial statements. What they claim? All the figures recorded in the financial statements are accurate. Everything is completely recorded. Assets and liabilities are properly valued. If we have recorded any asset, we are having the rights and obligation, mean ownership of that asset. If we have recorded any income, that income is actually occurred. Those claims of management are called assertions. Assertions mean claims are truths of management while preparing financial statements. We need to verify these claims, truths mean assertion of the financial statement. If we have verified financial statement assertions, we have obtained relevant mean appropriate audit evidence. If we are unable to verify financial statement assertions, We don't have relevant mean appropriate or correctness. What are those assertions? There are some assertions relating to income statement items. IA stands for income statement. There are some assertions relating to balance sheet items. BA stands for balance sheet. What are the assertions related to income statement items? Occurrence, completeness, classification, cutoff, accuracy. Occurrence, completeness, classification, cutoff, accuracy. OCCCA. There are some assertions relating to balance sheet item. What are those? Valuation, completeness, rights and obligation, existence, and classification. There are 5 account heads. What are the 5 account heads? Income, expenses that we record in income statement. What are the account heads of balance sheet? Assets, liabilities, and equity that we record in balance sheet. This means these 5 assertions we need to verify for income and expenses. These 5 assertions we need to verify for assets, liabilities, and equity. Very important thing. For income statement item like sale, purchase, expenses, inventory. What assertion we need to verify? Occurrence, completeness, classification, cutoff, accuracy, not valuation, not rights and obligation, not existence. If we are going to verify non-current assets, cash at bank, receivable, payable, share capital, loan liability, we need to verify assertions valuation, completeness, rights and obligation, existence, not occurrence, not cutoff, not accuracy. Both have classification, both have completeness. Let's see what does these assertion mean. Occurrence. Occurrence means like if any income has been recorded into the financial statement, that income has actually occurred. It is not fictitious, not fake. How we can verify any income has actually occurred? What is income? Sales. How we can verify it is actually occurred, it is not fictitious or fake? We will compare the sale figure in the financial statements to the trial balance figure. The similar figure in trial balance. From trial balance to ledger. What is behind ledger? Journal entry. What is behind journal entry? Sale invoice. What is behind sale invoice? Dispatch note. What is behind dispatch note? Order from the customer. If this sale figure in the financial statement, income statement is matched with the previous trial balance, ledger, journal entry, sale invoice, dispatch note, sale order, this means this sale has actually occurred. This is not fictitious or fake. If there is any mismatching behind, this means this is not occurred. Is that fine? If the sale is recorded, there should be corresponding amount in cash or receivable ledger as well. If there is no corresponding amount in cash or receivable ledger, this means the sale is fictitious, fake. Because company management try to overstate income, sales, and understate expenses. Because they always want profit should be occurrence mean income has actually occurred. It's not fictitious, overstated, or duplicated. Completeness means everything is completely recorded. There is no missing, especially the purchases and expenses. How we will verify this, we will discuss in next lecture. Because in next lecture, we will be working on verifying these assertions relating to different account balances. Classification means everything is properly classified into their account head, where direct expenses should be classified. Admin, distribution are under cost of sale. Direct expenses. Have you heard the term direct expenses? It should be part of cost of sale. And admin expenses should be under admin expenses. Expenses relating to sales should be under selling and distribution expenses. Revenue expenditure should be classified to income statement as expense. Capital expenditure should be classified to balance sheet as asset. We will check the classification through invoice of the expense, through nature of the expense. In all the figures are properly classified under their account head. Cutoff. What is meant by cutoff? Sometimes company management make cutoff errors. Suppose our current year is 31st December 2023. When this year has started? 1st of January 2023. This means if we are preparing financial statements for this period, all the transaction from this date to this date should be recorded in the financial statement, not before this date, not after this date. What happens sometimes? Company management record sales of January to here in December, and purchases and expenses of December they record to next mean in January. Purchase or expense of December, they try to record to January, and sales income of January they try to record in December, so that current year profit will be higher. How they can record a sale of January to December? Suppose company have received order in December and they deliver the goods in January. When sale should be recorded? When you have delivered the goods. Yeah. But they recorded sales in December as we have received order in December. So this is sale of December. No, this is sale of next period rather than current period. If transactions are not recorded in their correct period, that will be called cutoff errors. So in cutoff, we need to make sure transactions have been recorded in their correct period. If you made a sale in December and there is a sale return of that relating sale in January, where that sale return should be adjusted in January or December? December. Otherwise, December sale will be overstated. This is called cutoff errors. How to check this, we will learn next lecture. So occurrence mean income have actually occurred. It is not fictitious. Completeness mean expenses are completely recorded, not understated. Classification, every amount is properly classified under their account head. There is no misclassification, especially in direct expenses and operating expenses. And cutoff mean transaction have been recorded in their correct period. Accuracy mean everything is accurate. There is no arithmetic error. that we will recalculate every figure and see whether this amount is correct or not. Depreciation amount, we will recalculate using the rate and policy. Interest expense, we will recalculate using the loan amount and interest rate. Sale figure, we will recalculate unit into price per unit is equal to sale amount. We will recalculate and check there is no arithmetic mistake. For balance sheet item, we will verify these assertions. Valuation mean assets are properly valued, assets are not overvalued. How assets can be overvalued? How assets can be overvalued?
Don't appreciate the.
If company do not record depreciation, asset can be overvalued. If company do not record appropriate depreciation, like asset, there are some assets whose life is 5 years. This means depreciation rate should be 20%. 5 years mean 20%. 25 years asset will finish. If company charging depreciation on 10% rather than 20%, this means asset will be less depreciated. So in that manner, they can overvalue the asset. If they are not recording bad debts against receivable could be overvalued. If obsolete inventory is not recorded lower of cost NRV, inventory could be overvalued. So we need to make sure assets are not overvalued. Liabilities should not be undervalued. Completeness means there is no missing or understatement, especially relating to liabilities. In all the liabilities have been completely recorded, no omission. Rights and obligation, also called ownership. We need to make sure if company have recorded any asset, company is having the ownership of that asset. If company is not having any ownership of asset like lease asset, there should be corresponding liability recorded in the balance sheet. How we can verify companies having ownership of asset? For land and building, we can verify through title deeds registry document. For motor vehicle, we can check registry document. For machinery, we can check the invoice whether it is fully paid or still there is some amount due to pay.
We can't record it as an asset.
We can record as asset, but we should record liability as well for leases. Existence mean we will verify the asset recorded in the balance sheet actually exists in the company. How we can check existence?
The liability.
Physical inspection, we will physically inspect the asset. If there are 10 motor vehicles recording the balance sheet, we will physically inspect where are 10 vehicles, show me. If company has recorded any investment in property, we'll move to that area. Okay, show me where is your property.
With the document.
If company have recorded 5 million machinery, we will physically inspect where is that machinery, show us. Not only we will see the machinery, we will see whether it is of a 5 million value, not a scrap 50,000 value. Physical inspection of the asset to verify its existence. And classification mean there is no misclassification of capital and revenue expenditure, mean all capital nature expenditure has been recorded as asset. Revenue nature has been recorded as expense in profit and loss accounts. Is that fine? What are the assertions related to income statement items? Occurrence, completeness, classification, cutoff, accuracy. And assertion relating to balance sheet items. Valuation, completeness, rights and obligation, existence, and classification. So what is into a relevant audit evidence? If evidence supporting financial statement assertions. When we need to verify these assertions, when we perform substantive procedure. What is meant by substantive procedure? Detailed work. Substantive procedure mean detailed work. The purpose of substantive procedure is to verify financial statement assertions. Is to verify whether the account balance are complete, accurate, and valued properly. So while performing substantive procedure, what we do? We verify financial statement assertions. For income statement item, these assertions. For balance sheet item, these assertions. How to verify these assertions, we will learn in future. Our next 2-3 chapters are based on these things. How to verify sales, how to verify purchases, how to verify payroll, how to verify inventory, how to verify non-current assets, how to verify current assets, cash, how to verify receivables, how to verify payables, how to verify non-current liabilities, how to verify share capital. We need to learn procedures.
How many chapters are there in total?
So many. 14-15 chapters, not more than this. Let's discuss one small topic and then we will go for break. Procedures to collect audit evidence. Procedures to collect audit evidence. I mean, there are some procedures. Procedures mean auditor action that auditor perform to collect audit evidence. What action auditor perform? Inspection, observation, inquiry, confirmation, recalculation, reperformance, and analytical procedure. So these are the 7 procedures through which auditor take evidence. I mean, these are the actions that auditor normally perform to take evidence.
This is the sequence.
No sequence, no sequence. Inspection is of 2 types. Either document inspection or physical inspection. Document inspection, like to verify occurrence of sale, we need to compare one document with other, mean trial balance with the ledger, with the journal, with the sale invoice, with dispatch note, with the sale order. So this is called document inspection. To verify ownership of asset, we need to inspect registry document, title deeds, and invoices. That is called document inspection. Physical inspection is to verify existence of the assets, is to verify existence of the inventory. If company has stated any inventory in balance sheet, we will physically inspect where that inventory is. Not only we will inspect, we will count the inventory. Whether companies are having this number of units in their warehouse. Then we will able to verify the inventory figure. Observation is used for test of control. Like companies having different controls mean policies, like to record wages, salaries properly, we are having a system of recording employee working hours. What's the system? Every morning, while coming into the factory, every employee scan their card with a machine, and that machine will record their working hours automatically into the system. At end of day, they also scan that card with a machine, and machine will record their ending time, and their complete time for the day is automatically recorded into the system. This is the control policy to control working hours. But being auditor, we will perform test of this control through observation. At morning, we will stand beside the machine and we'll see everybody while entering the factory is scanning their card and his card and only one card. If any employee is scanning two cards, mean one card for himself, one card for absent employee, is that the control working properly? No. There is control. We need to test whether this control is working perfect or not. Or there should be a supervisor on the machine who is ensuring every employee is scanning his and only one card. If supervisor is checking that, this means control is strong. If supervisor is not there, control is weak. You are not controlling employee working hours. Absent employees hours are also recorded. But if suppose supervisor is there, but he is watching a match on a screen and employee behind him doing everything, this means this control is strong? No, if there is supervisor, he should monitor properly. Who will observe this? Watch this, whether this control is working properly or inquiry. If we need any information, any evidence from any employee of the company, mean from within the company, this will be called inquiry. Asking questions from others. If we are asking anything from outside the company, that will be called confirmation. Like for cash at bank, we will confirm the balance from the bank. For receivable, we will confirm the balance from the customer. For payable, we will confirm balance from the supplier. For loan leases, we will confirm balance from the bankers, lenders. So that will be called confirmation. Within the company, inquiry. Outside the company, confirmation. Recalculation is used to verify arithmetic accuracy of any data, like all the amount where calculation is involved, we will recalculate to check accuracy. This is also called recomputation. Computation, compute. Computation. Reperformance is also used for test of control. If client control system is a manual, we will perform test of control through observation. But if client control system is computerized, where are the controls inside the system? Can we observe inside the system? No. We will perform some dummy transactions over the system and see the results are the same as of a client routine results. Through this, we can perform test of control of computerized system. How we will done in future. Analytical procedure where we compare certain data with other data to check whether figures are same or not. Like sale figure, we will compare with cash book, we will compare with the receivable ledger, that will be called analytical procedure. Current year sale, we will compare with the previous year, whether the similar figure was in previous year, there was not huge change. Because if there is huge change, there are chances of misstatement. And for analytical procedure, we can use the word compare, or we can use the word reconcile. Reconciliation of this with this. So these are the procedures, auditor action that auditor perform to collect audit evidence. Reperform mean use to check test of control in computerized system, mean will reperform dummy transaction into the system. To compare our dummy transaction result with the client original transaction results. If they are same, control system is strong. If results are different, control system is weak.
So computerized.
Yeah. So these are the procedures. Sometimes examiner ask, write down procedures. This means our sentence should start from these words. Examiner asked, write down procedures to verify loan. What we will write? Inspection of loan agreement to verify the amount, interest rate, and time of the loan. This is called procedure, inspection. Sometimes examiner asks, you need to write down the evidence. What is evidence? After performing this procedure, what we are having in the working paper, that is evidence. What we will write in evidence? Copy of loan agreement. What we are having after inspection of loan agreement, what we are having in the working paper? Copy of loan agreement. So loan agreement copy or copy of loan agreement to verify amount, interest rate, and time period. Mean after performing the action, what you are having in the working paper, that is evidence. Procedure mean you need to write down your action, what you will do to verify this. Either you will inspect this, either you will observe this, either you will inquire, mean ask a question about this, either you will confirm from customer, from supplier, from bank about this, that is procedure. And after this procedure, what you are having in your working paper, that will be called evidence. Is it fine? While writing evidence, we don't need to show our action. While writing procedure, we need to start our sentence from these words. Let's take a break. After break, we will discuss a few things more.
I need to do a thesis, right?
Yeah, after completing 9 papers of ACCA.
After completing that, then the thesis, what is it is about? Like what is included in that thesis? Do I need the notes and all writer? Okay.
Not relating to audit, that will be relating to accountancy and business performance.
Okay.
It's better if you go for thesis after studying SBL. SBL. Yeah, professional level. Because you will study some model in SBL that you need to apply in thesis. Okay. So what we were discussing, audit evidence.
And there is some marks which I need to constantly.
No marks, just complete 9 papers.
Oh, first one.
You can do that 2026.
Yeah. Audit documentation. Mean audit working paper. Whatever auditor do, he must document his work. Whatever the procedure he is performing, whatever the result he is obtaining after performing the procedure, he need to document everything. That is called audit working paper. Not only auditor need to prepare working paper, they need to keep in record for coming 5 years. Because even after 3-4 years, anybody can ask you why you have given that opinion that you expressed 4 years back. So how you can justify your opinion? Through working paper. I mean, without working paper, you will not be able to justify your opinion. Why auditor need to prepare working paper? To justify his opinion. If your body ACCA want to see whether you are working as per auditing standards or not, how they can see? Through your working paper. Because in working paper, you will write, I have performed this procedure as per this standard, and I obtained these results. So what are the purposes of working paper? I mean, why we need to prepare working paper? Provide evidence that audit was planned and performed in accordance with ISAs. To ensure delegated work was properly performed, if you have assigned a task to your junior, how you can ensure he has performed the task properly? By checking his working paper. Working paper will assist in direction, supervision, and review of audit work. Mean through working paper, you can review, you can supervise the work of your juniors. Working paper help the firm to check quality control of the audit work and helping ensure continuity where there are staff changes. Suppose you started audit with some staff members. After 1 month, few staff members left. You have assigned new staff to the audit team. How new staff will ensure how much work has been done, how much left? They will know about through working paper. So if there is any staff changes, you can even continue the work from where previous staff has finished, how they can identify what have done, what left through working paper. And 1 year working paper can help to plan the future audit as well. Like previous year working paper help you in planning of current year. Like what was the high risky area in previous year? This means in this company, these are the high risky areas for the current year as well. And working paper is most importantly to justify your audit opinion. Without working paper, you cannot justify your opinion. You will not be able to express opinion. So what are working paper? These are files, either paper file or computerized file. And there are two types of files in working paper. One is called PAF, permanent audit file. And other is called CAF, current audit file. Permanent audit file, current audit file. Suppose we are working on one client from last so many years. We are auditing one client from so many years. There could be some document of the client that do not change year to year. What are the documents that do not change year to year?
Fixed asset.
Fixed asset register,
Yeah.
asset register. What else? Loan or lease contract. If you have obtained a loan, lease for 10 years, so they will be same from year to year. Company organizational chart.
Incorporation.
What is the structure of the organization that doesn't change year to year? Constitutional documents. What is meant by constitutional documents? What is meant by constitutional document? Memorandum of Association and Article of Association, MOA and AOA. Organization policy document that do not change year to year. Policies normally remain same for longer period. These will be put into a file called permanent audit file. Permanent audit file will contain a document that are of permanent importance, continuous importance that do not vary from year to year. So we will keep those documents in permanent audit file. And there could be some documents that are relating to current year audit only. We will keep those documents in current audit file, like financial statements, changes every year according to the financial record figures. So we keep financial statement copy in current audit file. Audit plan normally change year to year because we have identified risky areas for the current year only. That is also called planning memorandum. Documents relating to current year audit procedures, working papers of procedures performed. What else? Letter of weaknesses. If during year we have found any weaknesses in the system, we will communicate to the management through letter of weaknesses. Written representation obtained. What is meant by written representation? Extra evidence that we take from management in case we are unable to obtain sufficient evidence. So to make the evidence sufficient, we take evidence from management. That is called written representation from management that is relating to current year only. So there are two components of working paper or audit documentation. PF will contain document that is of permanent nature, do not change year to year. We keep their copies in every year audit working papers file. And current audit file will contain documents that are relating to current year audit only, that do not change year to year. What could be those we have discussed? Okay, let's discuss what are the characteristics of good working paper. What working paper look like? This is a picture of a working paper. Client name should be mentioned so that it should not be put into the other client working paper file. So through this client name, we can identify, okay, this working paper is relating to procedure of this company. Year end must be mentioned because if we are conducting audit from so many years, so year end must be mentioned so that it should be kept into correct year file. Lead schedule mean heading should be there. Receivable, this means this working paper is prepared after performing procedures on the receivable. What is this? Page reference number should be there so that we can maintain working paper files sequence wise. Like after D1, there will be D2 document, there will be D3, there will be D4. So that if we need to find any document from the file in future, we can find easily if there are a page reference number over there, sequence wise. And then test objective mean what you have performed procedure for what purpose. The purpose of performing the procedure must be mentioned. Like for receivable, what you are going to check, verify validity and completeness of a recorded receivable. And how many types of receivables are there, like trade receivables, loan debtor, prepayments, all the receivables amount for the current year as well as previous year should be mentioned properly. Like trade receivables verification procedure detail is on a D2 page. Loan debtors verification procedure detail is on D3 page. I mean, page reference should be there from where we can check the detail of these amounts. Then there should be conclusion. What is the conclusion of your procedures? Receivables are not materially misstated. Who performed the procedure? He need to prepare the working paper. His name, signature along with the date should be there. And if one audit team member have performed the work, other team member should review his work. And who has reviewed the work, his name, signature should also be there. Even in procedure, you have to mention how many total transactions were there, how much sample you have obtained, how you obtained the sample, everything should be mentioned in that detail. So what are the characteristics of good working paper? There should be a page reference number. There should be client name. There should be year end. There should be heading of the account balance. Test objective should be there. There should be cross referencing of a detail of working papers. Amount should be there along with the current year figures, previous year figures. There should be conclusion. Who prepared the working paper, his name, signature, date, and who reviewed the working paper, his name, signature, date. These are the qualities of good working paper. So what are the qualities of good working paper? The name of the client should be there. Period covered mean year end should be there. Subject matter mean heading of the account balance should be there. File reference number mean page reference number should be there. The person who prepared his name, signature with the date. The person who reviewed the work, his name, signature, date. Sample size should be mentioned. How you selected the sample. What are the tests on the sample mean, what procedure you have performed, either inspection, observation, inquiry, confirmation. What are the results of your procedures? And if there is any detail in any other pages, so cross reference of other pages should be there. And there should be a conclusion reached, mean what you have concluded after performing the procedure, whether everything is okay or not okay. Mean whether there is a misstatement or no misstatement. So these are the qualities of good working paper. So what is working paper? What are the purposes? What are the two contents, PAF, CAF, and qualities of good working paper? There are two types of review of working papers. One is called hot review and other is called cold review. Hot review and cold review. What is a hot review? Before signing the audit report, there should be a review of working paper. Who will sign the audit report? Engagement partner. So before signing the audit report, he will review the working paper of the work performed by audit team. He will see whether all work has been completed, whether all evidence has been obtained, then he will sign the audit report. This is compulsory, mandatory. Without this, audit report should not be signed. What is called review of working paper after signing the audit report. This is for quality control purpose. Mean when you have completed audit, you need to review your working paper from any independent partner. Who will perform this? Independent partner. Independent partner means the partner who is not a part of this audit team. He could be an other person from your firm, could be a partner from your firm, any other office, or could be partner of any other firm. They will perform quality control of your working paper. You will perform quality control of their working paper.
Is this compulsory?
This is also compulsory, not every year, every 3 years it should be performed. It is also called QCR. If your body want to check quality of your work, how they will check? Through cold review. So hot review by the same engagement partner of the team. And cold review is called quality control review. This is also called commissioning peer review. Peer means same level, other person, other independent partner will perform review of working paper. And this chapter is completed. Now we are moving towards next chapter. Reliance on the work of others. Yeah. Sometimes we need to rely on the work of others. Means sometimes during audit, we need help of some other people. We need to perform some work from other people. Mean we need to rely on the work of others. Why? To obtain evidence. To whom work we rely? We rely on the work of expert. We need to rely on the work of internal auditor. And we need to rely on the work of service organization. We are the external auditor. But sometimes we need to rely on the work of expert. We need to rely on the work of internal auditor. And we need to rely on the work of service organization. Mean we need to take some evidence from these people. Who is expert? A person who is having knowledge other than accounting and auditing. Who is expert? A person who is having knowledge other than accounting and auditing. And we need to use his work to obtain evidence. Because in accounting auditing, there is no more expert than us. We are more expert in accounting and auditing. This expert is a person who's having knowledge other than accounting and auditing. Suppose we are going to conduct audit of a store. And in that store, they have recorded inventory of huge amount. And while auditing inventory, we found there are different types of inventories. And one type of inventory is jewelry. And there is a huge amount of jewelry in the inventory. We asked the management, where is that jewelry? They showed us a box full of gold diamond jewelry. This is a jewelry. And they have recorded $1 million amount of that jewelry. But we need to verify whether this jewelry is of that $1 million amount or not. If the jewelry is original gold, original diamond, the value will be correct. But if it's just shining but not gold, it's just shining but not original diamond, the value could not be like that. Can we verify whether it is original gold and original diamond? Who will verify? Any expert, any jeweler. This means we need to rely on the work of expert, who will examine that and will tell us that whether it is original gold, original diamond, and is of that value or not. In this case, we need to place reliance on the work of expert. Without placing reliance on the work of expert, without using expert, we are not able to take sufficient appropriate audit evidence leading to account balance. Is that fine? We are conducting audit of a petrol station. In petrol station financial statement, they have recorded a huge amount of inventory. What is that inventory? Oil and gas reserves. We asked the management, where are these oil and gas reserves? They said, under the floor. Can we measure how much kg gas is there, how much liter petrol is there, so that we can calculate a value? No. This means here to calculate quantity of oil and gas reserve, we need some experts, some engineers. They will measure and tell us the quantity. Then we can multiply quantity with the value and we will be able to verify inventory amount. This means sometime during audit, we need to rely on the work of expert. Who is expert? A person or group of person in organization who is having a knowledge other than accounting and auditing. Jeweler, engineer. And we need to use their work to take evidence. Without using them, we are not able to take evidence. Yes.
They are right, like,
That is separate issue. We will check. We're gonna discuss these things. First, we are just discussing who is expert. Why we need to use the work of expert. Is that fine? Expert could be of two types. Auditor's expert or management expert. Who's a auditor expert? Auditor's expert, a person that is arranged by us. That will be called auditor's expert. Who would be the management expert? A person who is arranged by a company management who is more reliable. Auditor expert or management expert? Auditor's expert, obviously, if a company management have arranged any person, he will tell the amount that is mentioned in the financial statements. He will tell according to the management wishes. This means we should always rely on auditor expert. We shouldn't rely on management expert, but we can rely by checking few things. So before placing before placing reliance on the work of expert. So before placing reliance On work of expert, we should check certain things. We should ensure certain factors. What? Qualification. Is like us, these engineers are expert, qualified. Experience, whether this expert has performed this type of work in past or not. Reputation, if in the past he has provided this kind of valuation, how authentic was those valuations? Application of standard in his work. Application of standard in his work mean whether he apply any policies standard in his work or not. If he is applying any standard, any rules in his work, this mean his work is reliable. Membership of professional body. Like accountant, engineers are also member of certain bodies. And if a person is a member of any body, that body is also checking his work, his quality of work. If he is not performing quality work, his membership will be cancelled. After cancellation of membership, your whole life will be affected. If a person is a member of any body, he think once to provide wrong report, because if that report proves wrong, my membership will be cancelled. Membership person cannot obtain easily. How you can obtain membership of ACCA? After completing 13 exams and then completing 3 years practical experience. And if you provide wrong report in future and ACCA is aware of this, ACCA will cancel your membership. Mean you will not be able to claim I am ACCA. That's why we need to check membership or professional body of the expert as well, especially the engineers, lawyers. And last but not the least, we need to check his independence, whether he is having any influence of client management or not. If he is having client management influence, mean he is not independent. This means he is not reliable. So before placing reliance on the work of expert, we should check his qualification, experience, reputation, application of standard in his work, membership of professional body, and independence. So this is relating to expert. Let's read. So who is expert? An individual or organization possessing expertise in a particular field other than accounting and auditing. Lawyer, engineers, jewelers, whose work is used by the auditor. Why? To assist in obtaining sufficient appropriate audit evidence, mean without using his work, we are unable to obtain sufficient appropriate audit evidence relating to any account balance. Where we need the expert. Asset valuation. There is a building. Company has recorded huge amount of that building in the financial statement. How we can verify the amount of building? They are saying it's in posh area. That's why due to posh area, its value is high. This means we need to consult some of the property agent, estate agent. They will provide accurate value of that building according to the area. Yeah. Plant and machinery of complex nature. We need some engineers for their value. Jewelry, art of work, antique, intangible assets. So we need expert. Specialist techniques like employee benefit plan. There is a specialist person called actuarial. You will learn this IAS 19 accounting standard in your accounting paper. Then you will realize who is actuaries, who is actuarial valuation. Estimation of oil and gas reserve if you are going to conduct audit of petrol station. Valuation of environmental liabilities. If company have polluted the environment and there are chances of fine penalties imposed, with how much amount provision should be there. You need to consult any expert who will provide you amount of fine penalties for which company need to create the provision. Measurement of long-term contract work in progress. If company is going to construct a building that is a project of 5 years, now 3-year work has been completed and they has created an asset. What is the value of that 3-year work completed? We need to consult some engineers, expert. Legal opinion, like a company is facing any legal case for damages, we need to consult the lawyers who will provide us how much damages company need to pay, whether there is a probability, whether there is possibility, because if there is probability, there should be provision. If there is possibility, there should be contingent liability disclosure. So we need to consult the lawyers. And analysis of complex tax compliance issues. If there are complex tax calculation involved, we need to consult a tax expert regarding this. If we are not aware of tax laws, because tax laws vary from country to country. Even in America, in all the states of America, there are different tax laws. In one country, there are different states. Every state is having different tax laws. If we are conducting audit in other state, so we need to consult local tax expert regarding the tax evaluation. So these are the area where we need the expert, because these are the area where accounting auditing knowledge is not applied. This is the knowledge that is other than accounting and auditing. And to take evidence, we need to engage expert. What we need to check before placing lines on the work of expert, his objectivity, his qualification, nature, timing, whether he will keep confidentiality, his independence, and everything. It should be appreciated that auditor cannot rely 100% on expert work. We should try to calculate that value through our procedure as well. Though our procedure calculation will not be that much accurate that is provided by the expert, but we should not always rely 100% on expert. We should also calculate that value by using our procedure and compare our value with expert value. If both are same, expert is okay. If there is a little bit difference between R value and expert value, this means expert value is accurate. But if there is a too much difference between R value and expert value, in that case, we should consult second expert. Then we will realize whether expert is right or we are right. Because if you have performed some of the work by expert, tomorrow, due to that wrong value, your opinion become wrong. Who will responsible for wrong opinion? You, auditor, not the expert. You will not be able to say this work was performed by the expert. That's why auditor have to decide whether he need to use the work of expert or not. If he need to use the work of expert, he should check these things before placing lines on his work. And we should not rely 100% on expert valuation. We should calculate that value by ourselves as well, so that we can compare with expert. If there is little bit difference, okay, expert value is fine. But if there is too much difference, there are chances expert is providing different value. We should consult second expert. If we have used expert during the audit, mean performed some work by the expert, we will never ever state, mention in audit report that this work is performed by expert. No. This is the matter between auditor and expert. We cannot say in audit report, this account balance value is calculated by the expert. No, we are responsible for every audit matter. We cannot shift our responsibility to anybody else.
You can't even mention.
You can't even mention. Is that fine? During audit, we need to place reliance on internal auditor work. Who is internal auditor? Employee of the company, whose role is to review internal control system. How he review internal control system? By performing test of control and substantive procedure. And we being external auditor also need to perform test of control and substantive procedure. If we take working paper of internal auditor, our work will reduce. Not only work, time will be saved, even audit cost will be reduced. We will be able to express audit opinion quickly. This means during audit, external auditor can place reliance on the work of internal audit. Whether he should place reliance on the work of internal auditor, who will decide? Auditor, not company management. Because by placing reliance on the internal audit work, your work will be reduced, your audit responsibility will not reduce. Tomorrow, you cannot say this work was performed by internal auditor, so I'm not responsible in case of wrong opinion. No, you will be responsible for that. That's why before placing reliance on internal auditor work, you must check certain things. What you need to check? You need to check. So before placing reliance, you need to check his qualification, experience, reputation, application of standard in his work, his independence, his objectivity.
Same like the
Objectivity means whether he is a work is relating to review of internal control system or not. If he is performing value for money review, IT review, best value review, then we will not place reliance on his work because his work objectivity is different than our work objectivity. If he is performing a review of internal control system through test of control, substantive procedure, then his work is relevant to us, we can rely. And systematic. Application of procedures. What does that mean? Application of standard in his work. Work performed with due care. In whether he is performing work with care, then we should rely. If he is not performing work with care, we should not rely on his work. So before placing reliance on the work of internal auditor, we should check his qualification, experience, reputation, systematic application of procedures, independence, objectivity. Internal auditor independence can be ensured if he is reporting to audit committee. If he is reporting to company management or finance director, he is not independent because he is working under their pressure. If internal auditor appointment is by the audit committee, then he is independent. If he is appointed by management, then he is a yes man of management. He will do everything according to management wish. he will provide us wrong working paper. If his work plan is defined by audit committee, he will be independent. If his work plan is defined by company management, mean director, finance director, then he will not be independent. So in independence, we need to make sure he is reporting his work to audit committee. Mean he is highlighting all the issues properly. If he is reporting to management, this means he is not highlighting management weaknesses. If his work plan is defined by audit committee, if his appointment is by audit committee, then he will be independent. Resources mean he is having enough staff to perform the work, then his work objectivity will be achieved. If he's having not a appropriate staff, not qualified staff, this means his work is not. How we should to check his work. If we are going to rely work on the internal auditor, mean we have asked the internal auditor to provide your working paper to us. Start of year to because we are going to last on your hardware, then he will not provide us. And what we are expecting, oh, he does well on the farm is. And he was not he asked for it is because we are but name. Not only we should meet at start of year, we should meet him during year as well. To assess his work. We need to check his work, whether he is performing. If at end of audit he provided us working paper, we saw he didn't perform as per standard. This means this work is not reliable. This means we need to perform by ourselves. This will delay in audit report. That's why during audit, we should arrange a meeting with him to assess his work. How we can assess his work? We need to re-perform some of internal audit work. We need to re-perform some of internal audit work on sample basis. In whatever the work he has performed, we need to re-perform that work on sample basis ourselves, and we should compare in the case we should continue saying we should farm owner should farm on work and not rely on him. So how we can place line on the thermometer for this lines we need before placing lines, we need to check systematic application of procedure in his work and whether he performed work with due care or not. Before placing lines, we need to make sure he is helping us or not. How can we lines? Experience into another years. How we can if on office and compare the agree from what is the results that are asking say not like in or trigger whether you log system systems you are saying to the system, please stop. Okay, that's enough for today.
Yeah, okay.
There are some questions, but we will cover in next class. There is one more topic left. That's a service organization we will cover in next class. And in next class, we will start audit. Mean how to verify financial statements figures. So see you in next class. That will be probably